Hello and welcome to TdotRealEstate, your go-to source for everything real estate. We have an exciting episode lined up today, and I'll be going through some of the hottest topics in the market right now. So market activity and the latest price changes, the surge in interest rates and its impact on property prices. A close look at the current inventory status, declining housing stats and new constructions, the challenges faced by Precon investors, and finally, the issues property developers are facing today. So first, the number of transactions. Last year in August, we had about 5,584 transactions versus this year, it was in August, we had 5,294 transactions. That's a drop of 5%. It's not a jump considering what the kind of activity we had last year. I'll be going through a lot of that in detail further. So next is the selling price. We had about 1,079,000 an average property selling last year, and this year was 1,082,000, just a jump of 0.3%. But if you consider what the market was in the last couple of years and how it was changing, then this would come as a surprise to you. So briefly, if you go back to last year, we had a crazy start of the year, January, February, March. The market started slowing down when the interest rate was announced. So that was roughly around March, April when we had the first interest rate increase. And that's when the market started slowing down. The last three quarters, especially the last two quarters, were very slow in 2022. And in fact, the property values dropped almost 10 to 15% across the board in Greater Toronto area. If you consider that, this price should have been further down. But what happened was the market was slower in the last couple quarters. But in the first two quarters of this year, especially in January, first couple of weeks after, when during the regular announcement of Bank of Canada, the indication that came from them was that the interest rate are not going to go up further, and that the things would be settling down, and eventually maybe by summer or late summer we will see some drop. They didn't really specifically clearly mention this, but the words were kind of giving a positive outlook to the consumers, to the buyers, to Canadians, that this is where we are heading to. And what the buyers or investors took that was a cue of getting into home ownership, because when the market was slower, last year, what that meant was there were a lot of buyers that were holding on to their purchase. So this indication was a positive note for those consumers and those buyers. And we had a surge in demand, and people were getting out. And it was again FOMO back into play, where people were trying to get into home purchase before the other person does. So what that meant was, during early spring, we have a shortage of inventory that's been consistent. That's how it has been for the last 5 to 7 years, where the inventory is lower compared to what the demand was. So that continued this year as well. Then nobody really expected that the market would surge because the interest rate was going up. But the adverse happened, and there was a lot of demand, and there were not enough sellers in the market. So it was in somewhere around March and April where the inventory dropped almost 40% compared to last year. That was a huge number. There was a lot more buyers, lot more buyers than there were sellers in the market. So what that meant was there were a lot of, multiple offers, then again, prices going up. There was a lot of blind bidding, again, a lot of frustration for the buyers, and that's what happened. And again, during June time, when the interest rate was increased for the 0.25%, then that's again was kind of jolt again to a shock to the buyers, and then things started slowing down, and that's where we have a slowdown starting again this year. So the new listings last year around was 10,578, and this year on August it was 12,296. It's a jump of about 16%, but it's definitely a good sign for buyers that there is a lot more options for them to go out. In fact, that was last month, and this month I see that there is a lot more inventory, and there is more activity in terms of properties coming in the market. People are trying to sell. There's a panic mode, but there are also other stories or the situation behind the scene where the sellers have to sell for various other reasons. and we are seeing inventory going up because of that. So that's about 16% increase. The number of days dropped a bit again this year. It was 34 days last year to 28 days now in the last few weeks. So that's where the activity and the numbers are. And if you look at the Bank of Canada, when it started, increasing the interest rate last year, they started with, it was originally at 0.25%, and then it went up to, which is what's now at 5%. That's about 1,900% jump. That's a 1,900% jump in 1 year. That came as a shock to a lot of consumers, a lot of people who are homeowners who are on variable rate mortgage. And also those buyers who wanted to get into the market. That came as a shock, to future buyers as well, because there are a lot of buyers who wanted to get into the market when it slows down, so there is more affordability. But they're kind of in a fix because the buyers who had, suppose last year if they were in the market, they would have qualified for, say, like $1 million. Now it'll be like 800, 850, 900, something like that. So they will have to take a hit in terms of what they can purchase. So buyers have adjusted to that because there is no other option. On the other side, the sellers are not really able to, or most of the sellers are still holding on because the banks have extended the amortization period from what they had 25 years to now it could be like 60, 70, 80 years for different individuals. Each bank seems to have more than 20-30% off mortgage holders that are over the 40, 50-year amortization period range. So when that mortgage is up for renewal in the next 2 to 3 years, that's where you will see like there's a lot of, unless the interest rate doesn't drop and it continues like this, then you would have serious issues coming up where the homeowners will not be able to really renew the mortgages. But things may change, but this is where it stands right now. The interest rate going up last year, as I mentioned earlier, last year when the interest rate started going up, there was a really shock in the market where the people who were trying to get into the market were really, or to purchase homes, were having a hard time getting the mortgage now as well. So this would continue. Like those people who are trying to get into the market, they would have to compromise about what they want to purchase, what they can purchase. Like what they want is something else, but they will have to compromise in that sense. So the higher borrowing costs is what would be holding on the buyers. The most important part here is for the buyers or sellers is to be aware, to know what's going on in the market, and not just go by the fear factor of reading the headlines that there is a shock in the market is crashing, things like that. So let me put it this way here. In GTA, the demand would always be higher because this is the largest city in Canada. Vancouver and Toronto is like where you would see the demand would always be there because the supply is extremely low, and then unless the buyers, people would be going out far to live, but they'll have to work, come to Toronto to work. So the commute, gas prices, and all these adds up. So it's more, where the people want to stay would be, in the main metropolitan areas, the main areas where we have the subway, the transit service and all that, which would allow the people to stay closer to the city. But again, they'll have to compromise, and instead of getting a 4-bedroom, they would get a 3-bedroom, or maybe compromise in the size of the home to stay within the city. So that's where it'll be in the long term as well. So it's the sooner the better for buyers or sellers to, or especially buyers, or especially first-time buyers, to get into the market and then get a foothold of where they want to be. It's definitely understandable that it'll be very difficult for first-time buyers to get in, but there are opportunities that needs to be explored. One thing that I do on a frequent basis, and I've been doing that for years, is posting updates for general public. It's for investors, but buyers can have a look at it as well, get some insight. The website is investingmadeeasy.ca, and I have data for that, for every month, and that's been posted. That's been doing that for years, and you can check different months and figure out where things are heading. I post information of where the market is heading. Is it buyer's market, seller's market? That gives you some indication of what you should be doing or what you should plan ahead. So check that website, investingmadeeasy.ca. That would be helpful to you. And So moving on, the multiple offers which we had earlier this year have died down, but again, it's more it's not like gone away, because the multiple offers depends on the listing strategy of if you're underpriced, then definitely you will be getting some offers, especially in GTA. You will have situations where buyers would be willing to purchase a property if it's listed at a few $100,000 below, then they would be trying to put an offer and see like how, or maybe at least test the waters where to see where the seller would be willing to sell for. The seller may not get what they're looking for, but definitely it'll sell. So the uncertainty about the economy, coupled with Bank of Canada's decision making, is what's really creating some sort of panic with the buyers and sellers, especially the sellers, because they are kind of uncertain, and those who have a variable rate mortgage are in a situation. So in the past, on the 6th September, Bank of Canada did announce that they will keep the interest rate at 5%, but that seems to be like a temporary relief. So last week, the Feds announced as well that they would not increase the interest rate, just like Canada did, and then they were very clear that they would be increasing interest. There would be another increase before end of the year, and Bank of Canada is sending similar signals as well. So you would see something happening in that direction, that there would be some increase, 0.25%, 0.5%, I don't know, but the inflation rate actually increased a couple of weeks back. It was last month it was 3.8, now it's like 4%. So that's definitely not a good news for Bank of Canada and for interest rate, and on those who are hoping that interest rates would drop, and that's the inflation going up is not a good sign. So moving on to the inventory, which is a very important part of, if you are a buyer or seller, you need to know what, like if you're planning to go and purchase something, you need to know what's available. Again, the reason you see multiple offers or the listing strategies is based on the volume of homes that are available and the demand. So right now, like the detached homes is about 1.5 months of inventory. The semis are 0.8%, the townhomes are 1.4%, and condos are 1.8 months of inventory. So this is what we have right now. So what it means is, if there are no more new properties that are coming in the market, then this is what we have, and this is how long it'll take for that particular segment of inventory or property to get sold. And obviously there'll be more properties coming up in the market, and then what I see is like that the number of months, number of properties available in all these segments of detached, semis, towns, and condos, that would increase in the next few months. We are looking more as a buyer's market now till the year end at least. So January onwards, there's no guarantee we know where things will be heading, because the government might announce some other incentives or something, some announcement about interest rate where it will give some sort of positive outlook to the buyers, and again people will start to come out and increase the interest in purchase and investments as well. So that's where the inventory stands at. So the next I wanted to touch was the housing starts and the new construction that is supposed to happen. So based on the demand, based on the immigrants coming in, the influx of all these immigrants that are expected in the next few years, there is a huge demand existing now with a lot of new immigrants, a lot of students, and there's a huge demand in terms of housing. The rental values have gone up 20-30% year over year. So that is increasing steeply. But the housing starts have actually not gone up, the way the demand is. And there are many reasons why. The cost of financing has significantly gone up. Cost of construction has gone up. There is a huge labor shortage. Again, that's one of the aspects of immigrations being given to qualified individuals as well. But apart from all this, there's a government fee, that levies, development charges. So there's a lot of talk about governments giving, importance to housing affordability. We hear that in Ontario, we see local, provincial, and then other parts of the country as well, and on federal level as well, where they talk about affordable housing. If you look at Toronto, for example, the housing levies, the development charges have gone up almost 49%. They were increased from last year to now. Just to give you an example, last year, Toronto, singles or semis, the development charges for 2022 were $93,978 versus this year is $139,830. That's about 49% jump in levies. So that's where, the actual fact is, the city should be cooperating as well. It's like a provincial and federal level where they should be working together. So the federal and provincial governments need to work together to bring in more housing, and that can only happen with all these issues addressed. So another topic that I want to cover was Precon buyers and investors and what they're facing, especially those investors who bought in 2022, early of this year as well, or last year. Those closing hours coming up now, and then many things happen because the property values, especially of new construction, that dropped from last year versus now, so they are unable to really get that mortgage which they had originally purchased for. Most of the buyers, pre-construction buyers, they had purchased with the intention of flipping, which means is before the closing they would sell that, assign that to some other buyer, and then get a bulk of the profit. But that's not happening because of the interest rates going up. The demand has really dropped. And that's where it comes into play, where the Precon investors are kind of a situation where they have to either sell it at a really low price. That would definitely be a dent on their projected profit is what the Precon investors would have to take. Either that hit, or they would have to keep that property, buy that, rent it out, and then keep it for a couple of years, and then that would eventually give them a cash flow positive eventually. So, but for now, that's the only way out for Precon investors. So if they have to close it, or if they forego, then they will be losing out on the money, plus the builders suing them. That's another thing. So the assignments is very slow. The qualifying factor for the mortgage is really high. So these are all the obstructions that the investors are facing. So the investors have to close on a higher interest rate, plus continuing on at cash flow negative, basically to rent, even though the rents are so high compared to last year, still they would be cash flow negative. So that's where eventually they would be positive, but that's where the Precon investors have to take the hit. So there is a lesson in this for people who want to get into the market. Make sure, in fact, not just this, Precon for condos or homes, for any kind of investments, they're always the rule is you have to have an exit plan. You have to have a plan A and plan B. Plan A is what you actually want or prefer it to happen, and plan B is like, what if that doesn't happen, what do you do? So plan A is like, you'll pay the builder whatever it is, like 20% up to the closing, and what if they don't qualify or interest rate goes up? So they have to have that extra cushion of money that should be available. Maybe it's a HELOC, maybe it's like a home equity line of credit which they have, some sort of money that's sitting somewhere in investments. So they should have some reserve funds that would take care of their investments. So they should have a plan A and plan B for investments. So that's the rule of the game. So moving on to the topic of what the developers are facing, we had about $700 million in outstanding debt by a Vancouver developer who was seeking creditor protection. GTA developer Estate 3 Home agreed to place several projects in receivership. So the lawsuit demands repayment of almost $200 million in loans. So other than that, I have noticed some kind of weird situation where properties or new builds that were almost ready to be launched, ready to be handed over to the buyers, they were they caught fire, and we had about 2-3 incidents like that within this year. On 12th April we had 20 homes caught on fire in Vaughan. On 21 June we had 10 homes in Oakville that caught fire, and on 20th July, in fact, I was passing by this particular area in Richmond Hill by Leslie and Stobart Road, where there were a bunch of homes that got fire. Just take a look at this video that I have. So those, so that's the situation with the new build. Some of them, and that's kind of comes as a surprise that with the really in a really short time we have these incidents of how new homes get that catch fire, and then they could be arson, they could be anything that's not really good, but it wasn't a good sign for. It's not a good thing for those particular buyers who are buying that property, or maybe that builder in these situations. Until next time, this is Nakri signing out from T.Real Estate. Thank you for watching, and see you in the next one.